the experts predict by the end of this year, we'll probably stay around, 6.375, 6.5. By the end of next year, they say we should be close to 6, maybe just under that, 5.875 to 6 and then in 2026 and on, we should fall hopefully closer to the low 5s.
Everybody's first asking, like, when is the crush gonna happen? Everybody's just, they just think it's gonna be crush and they're gonna buy something that it's worth like $1 million for like 500, and I'm like, it's not gonna happen.
Or if the buyer calls us and says, hey Z, we're having trouble, we lost a job, we can always be the point of communication with their servicer to see what can be done. There's forbearance, there's loan modifications. Now, all of these could have impacts to your credit, but they're gonna to get you through this period. Or if it's something more serious, maybe a loan modification where it does impact your credit, where they remodify the terms of the loan to be more favorable so you have a lower mortgage payment, maybe it's time to sell before the short sale period, you get into that period. Obviously, that's unfortunate and happens. But there's things that happen that are, out of people's control, and it happens all the time. But there's definitely things that can be done in unforeseen circumstances before you have to sell the home to hopefully get the buyer back on their feet and resume mortgage payments without impacting their credit.
We just had a great conversation about mortgage process, and this is my guest, Zlatan Hodzic. Can you please introduce yourself?
Yeah, thank you for having me. My name is Zlatan, like Susanna said. I go by Z. It's a lot easier.
Okay.
I'm with United Home Loans, a correspondent lender. We have an office in Western Springs and in Noble Square. So I'm based out of the Noble Square location. I've been there probably for 12, 13 years now. It runs away from you when you've been doing it that long. I love what I do. We kind of touched on why we love it.
You know that I just started like a year and a half.
You switched brokerages. You were somewhere else. Remember we had that Zoom meeting?
Yes. So I started with Keller Williams. It was a team.
Do you like the team or do you like being more on your own? Like,
This
what is your
This
setup
is like
here?
a big team. Nobody here is selfish. Like, they share with you everything.
Yeah.
So basically, if I need to know something, like let's say addendum for something. So like if I go to, there's one guy, Bogdan, like he helps you with everything. But
They're not Serbian, right? What are
no,
they?
they're mostly Ukrainian. In this company, basically every day you have one day training for something.
Yeah.
Like it's tech, it's this and that. Like we
It's
have
finance,
lenders
it's-
over.
yeah.
So that's about me. How about you?
Yeah, no, it's
How
we were just
long?
talking. It's been a crazy year so far, good and bad. I've probably
Why
been
good,
doing
why
this-
bad?
Well, obviously it's. I mean, you weren't working 4 years ago when it was, refis rates were in the 2s and the 3s. Supply was still plentiful. People were willing to list their house. People don't want to list their house now because they have nowhere to go. So even, our parents' generation who might be needing to downsize, there's no point for them to downsize because if they downsize, their mortgage is going to be the same because rates are so high. So things were good. Rates then jumped. Supply tightened up. But I still feel like we're doing the same amount of work. It's just not getting enough, the same amount of people to the closing table.
Okay.
So we were just talking how rates have started to dip a little bit. We were in the 7s. Now we're in the mid 6s, low 6s. So people have started coming out and wanting to refi. And hopefully that'll add more supply, which you guys should start to see.
I was even thinking about refinancing because when we bought last year, it was like December. Our rate was like 7.9.
Yeah.
So that was my question, next for you, just for myself. So what are the benefits of refinancing?
The benefit for you guys is that the fact that you're still very early on in your term. So you guys recently bought, is it a 30-year fixed mortgage?
Yes.
So you guys are 1 year in. So even if you refinance, you're going into another 30-year fixed loan that's only resetting by 1 year. So you haven't paid all this interest that now you're going to start repaying again. So that's one of the benefits is that you guys are still very early on. And to that point with the interest, you're going to save on a monthly basis, whatever it might be, $200, $300, $400. But it really over the life of the loan, it's going to compound and it's going to be hundreds of thousands of dollars. So not only are you saving on a monthly level, but every month that you make a payment, that's going to lower the amount of interest that you pay over the life of the loan. And between a 7.9 and a 6.5 interest rate, that's going to be significant.
No, but I was even thinking about next year. I'm just hoping that the rates are going to come close to 5.
Yeah.
5.5. So that would be the time that I would like to refinance.
And we were just talking about that, is when do you pull the trigger? Because there's obviously cost with a refinance.
Yeah, what is the cost? Like,
it's depending on if it's a condo, single family home, multi-unit, it probably equates to around, let's call it $2,500. If you have an association that requires more money to fill out a questionnaire, that's going to add some costs.
Okay.
Multi-units, the appraisal. Yeah.
I thought that it's like...
Not in Illinois. You know, Florida is really bad because you pay taxes again, transfer taxes. But Illinois is pretty good. And again, there's different options. You can take maybe an eighth of a higher rate and have the lender pay for your costs. You do skip a month of payment because mortgages are paid in arrears. So let's say you close September 15th. Your first payment's going to be November 1 for October. So some people are like, I'll pay the cost because I know I don't have a mortgage payment the next month.
Yeah.
But the question is, when do you do it? You know, do you do it now when you can save 1%, maybe more than 1%, or do you wait? The experts predict by the end of this year, we'll probably stay around, 6.375, 6.5. By the end of next year, they say we should be close to 6, maybe just under that, 5.875 to 6 and then in 2026 and on, we should fall hopefully closer to the low 5s. We're not going to see the 3s. We're not going to see the 2s.
Everybody's asking like, when our rate's going to be again like 2-3%. And I'm like,
and what are you telling buyers? I mean, are you getting some buyers that are saying interest rates are too high right now?
Yes, a lot of them.
Yeah.
The economic, it's not that great. I mean, like, my people are mostly in trucking business. Mm-hmm. Trucking business is like,
very familiar with that industry. Yeah.
Yeah, they're struggling.
Yeah.
Everybody's first asking like, when is the crush gonna happen?
Yeah.
Everybody's they just think it's gonna be crush and they're gonna buy something that it's worth like $1 million for like 500, and I'm like, it's not gonna happen.
And rarely, I mean, they've probably lived through that in 2008, 2009.
Not really. Most of my friends, we just came.
They're young. Yeah, they're our
younger
generation.
Kind of generation.
So they've read about it.
Yeah. So they were like,
Yeah, unfortunately, there's so much demand that I just don't see a crash happening like it did. I bet we'll see a correction where values maybe stagnate a little bit, maybe even fall, 2-3%. We're not going to see the 10-15% gains like we have been the past few years, but I don't think we're going to see a big, you probably agree, we're not going to see a big crash like we did.
Yeah, but everybody wants that.
They do, but the opposite of that is rents are just as expensive.
Yes.
So it's not like they're paying, cheap money to live elsewhere.
Yeah.
So what we usually find out is, when people come to get pre-approved, I say, what are you paying in rent? And what are you comfortable, or what do you want to pay in terms of a total housing payment? So your principal and interest, your taxes, your insurance, your HOA dues if you have a condo. And we typically find, or I've recently found, that they can afford something that they want and have it be very close, if not the same, as their rental payment.
So basically, my story was in December last year, we had like one old lady, she owned like 8 condos. Mm-hmm. And I happened to live in one of those.
You rented one of those?
Yeah. So when we moved from New York to Chicago, it was like 2020. Mm-hmm. It was like Corona time. So we paid a year. Yes, we paid a year in advance for rent. It was like $1,600, mm-hmm. And 2 years after. But we were asking her to like sell us the condo, and she was like, "No, I'm not ready yet. Here, this and that." So when she passed away, the sons, they put all of the 8 condos on the market. So we had like a month to figure out like either to buy or like to find something to rent. So we started looking into rent, and it was like $2,500 to rent.
For similar size?
Similar size, similar like good-looking buildings.
Yeah.
So I told my husband like, we should buy something, and now like the difference is just like $200 basically.
Yeah. Yeah.
So
and you're every month you're building that equity.
Yes.
So if you do need to sell, hopefully you get that equity back.
And even like we do some changes to a condo, so now it's worth even more. I mean, I'm in real estate, so I know exactly how much it's worth.
Yeah.
But still, I don't know. I was just glad that we did it because we were talking about it. I just feel that a lot of our people are so scared.
Sure.
Because even my husband, when we were speaking, he was, I don't want like 30 years mortgage.
Yeah.
It just sounds scary. So how do you?
Yeah, as you know, it's very different back home where, credits, you're putting a large down payment down. Otherwise, you're not buying. So people put 50, 60, 70% down, and mortgages are very small. So it's a very different industry and market there than it is here. My parents were the same way. We never bought, even though, I think they could have, but they were always so skeptical. So I don't know if it was a language barrier too. Maybe, I think people come here and they think that someone's going to take advantage of them. And I think that's part of our job, is to kind of assure them that, they're not being taken advantage of, that they're paying rent who's someone, whose mortgage is being paid for with that. So you're essentially doing the same thing. And I think our people are good savers as well. So it's not like they don't have the funds to put down the down payment. It's just our job to communicate, explain, translate a lot of different things, especially when it comes to the closing. Why am I paying title insurance? What is a title policy? Why am I paying a closing escrow fee? What's an origination charge? What are recording charges? So I think explaining all these things and taking our time and holding their hand, which, we do on every home buyer, first-time home buyer or subsequent home buyer, but especially for our people, is to explain why it's needed, that it's, very normal. And from the beginning, explaining that they're going to be put into a comfortable position. This is going to be your mortgage payment. This is going to be your cash to close. This is where everything is going, and kind of assuring them that no one's, taking advantage of them. And moving forward, it's going to put them in a better position, and hopefully their kids and generations. I just feel that,
forward. Let's say my dad, he's just saving. And if he doesn't have enough to buy a condo, he's like, I'm not going to take 10 grand from the bank. So because he's scared of the interest rate or whatever. Yeah. But I just feel that they're not educated enough, especially here, and they're scared, what if, because they think 30 years, you cannot sell it. I mean, it's just Yeah. But again, they're paying rent to someone, right? So. Yeah. But do you know what is the excuse? For, let's say, a few of my friends, they're like, yeah, but I can, let's say, I don't want to pay anymore. I can move. It's easy, I don't have to do this and that. But
are you getting
still they're in the same condo for 6 years? And I'm like,
are you getting a lot of friends that maybe, and as a lender, I'm always comfortable saying this, maybe you are in a position to rent for another few years. You know what I mean? I think it's okay to say that to people if they're not in the right, if they're young, if they're moving, depending on what their work is, I'm also okay telling clients, hey, maybe it's better for you to rent.
No, I always say that. Yeah. I'm I know most of them, my friends, I know their situation. So I would never tell them you should buy if they should not buy. Yeah. So it's always better. I just explain them, this is better for this is for this. Sure. So they know, but I just feel that they have some barriers in their head. Yeah. It's just a big thing, especially because we came less than 10 years ago, and everybody's, but they're making a lot of money, so they can, afford definitely.
Is your client base, the one that you're building, is it mostly personal relationships? Are you getting a lot of social media business? What does that look like?
Not yet.
Not yet. Yeah. It takes a while, right?
It definitely. I just had the other day a guy who's, he just followed me on Instagram. Yeah. He's like, but it was a different business. He does something else. And then he just said, I'm looking to buy by the end of the year. And I'm like, great.
Yeah, that's a great timeline.
So, I was like, do you want to do a buyer consultation? He was like, yeah. So we're probably going to schedule something for next week. Yeah.
So that's the goal with these videos.
Yes, it's I didn't expect it. But, my goal was to reach people, just so they have me on their mind when they think about real estate. It's I don't like talking to people directly, saying I'm a real estate agent, but if they see what I do, and nowadays everybody's looking at the social media, so I'm just posting and
with the recent, lawsuits and the new guideline changes, I feel like it's front headline news. Are you seeing a lot of people leave the industry? I feel like the longer you're in the industry, the more people are like, okay, She knows what she's doing. He knows what he's doing. Like, you know.
I just feel now that I'm going to be in a better position because when I started in real estate, it was really bad. Nobody was selling. Nobody was buying.
There's only one way to go, right? Yeah.
And like people who got into real estate, I feel like 3 years ago or 4 years ago, it was easier for them to, you know, get the clients. Everybody was buying and selling.
Yeah.
So I was like hustling. I was like doing so much more work than, you know, some other people. So I just feel when they are not doing whatever that they used to do to lead gen or whatever, I just feel that I'm gonna be in better position, like in the future. Other thing is referrals, because when they started, everybody was selling and buying, and so now they already have like few people, you know, they would refer them, so that is their benefit. But also, I think a lot of agents will leave the industry.
Leave the market.
Yeah.
Same thing on the lending side. We've seen a lot of people leave.
Oh, really?
And, I think is a same thing with your industry. There's a lot of people trying to do it part-time. You know what I mean? And they're not really benefiting their clients. They're not really, you know, putting everything into it. So I feel like those people are the ones that are leaving, which will be good for everyone involved.
It's always good, just because I love this so much. Otherwise, like financially, my husband pays for everything.
Yeah. But the goal is to get to a point where
Yeah. And even though when I make money, when I do the closing, I just put everything into marketing.
Oh, just reinvest it in yourself?
Yes. Just because I feel that I'm going to get into one point where I'm going to just
which
sell.
means a lot of coffee, right? It's a key to this industry. I think you hit it on the head. I think part of the benefit of this industry is every day is different. Every client, every situation is different, which allows us to be creative and kind of, you know, enjoy the process too with them. It's not the same rudimentary thing that you're doing.
So I just wanted to ask you, like, what do you say to, let's say, a client who has no idea about the process of mortgage? Like, how do you start?
I think key for me is putting them at ease, right? So wherever we are in the process, whatever they're doing, whether it's, you know, asking initial questions, getting pre-approved, sending me, you know, homes that they want to see numbers on, everything is done for their information, right? They're not in any sort of binding contract with me, working with me. They can work with whoever they want. I want to have them work with me, obviously, but I want to make sure that I'm providing the service, competitive numbers, but also knowing that they, you know, if this isn't for them, they can back out. And I think that immediately puts them at ease, and they understand that this is, you know, to see if this is, you know, something they want to go with and is beneficial for them. So, you know, if a client comes to me and they say, hey, I want to get pre-approved, great. You know, everything these days is obviously done over a secure link where they can enter their information. But I like to have an initial consultation call where I ask them, you know, what we talked about earlier. What is your current housing situation? Are you living with parents? Are you paying rent? In terms of what you're looking for, I'm sure everyone starts a search on Redfin and Zillow, right? Have you identified properties that you can see yourself living in? Okay, what are those price ranges? And what does that translate into in terms of a monthly payment? Are you comfortable with something like this? Okay, well, if you're not, maybe we have to scale back, or if you are, great, you can find something in that range. And then the pre-approval part is the easy part, right? They fill out their information, they send me documents, which we can kind of go over. And once they have the pre-approval, it just starts this process where now you have this pre-approval, you assure your agent that they're good to go, and any sellers that once you find a property, but really from that point on, send me properties. Send me, if you're going to go see 5 properties, you know, this weekend with you, send me 5 properties. I'm going to run numbers for you so you can identify which ones are already maybe a little too high. This one fits just right. So you're not going into something and then putting yourself in a position to be, you know, house poor or uncomfortable after closing. I think that's the worst thing we could do, especially in an economy like this, where people are kind of maybe stretching themselves or feeling rushed to do something, or in an unstable job economy where people might lose jobs, unfortunately, moving forward. So we want to make sure people are comfortable, conservative, and we're putting them into a good spot.
So let's say when you just said losing jobs, so what is, like, let's say somebody defaults on, not defaults, but let's say they call you like, I don't know how I'm going to make next payment. So what do you say?
So when you close on a loan, you sign a mortgage. A mortgage essentially is an agreement between a buyer and a bank that says, hey, you're going to repay this loan for 30 years, for example, and the bank is going to hold the title to the home, which is they're going to own the home until you pay it off. If you pay it off, you get a release, you get the title in your name. Essentially, if the buyer defaults, right, the bank can seize control of the property. But there's many steps before that. So we are always going to be the first point of contact for a buyer. If the buyer calls us and says, hey, Z, we're having trouble, we lost a job, or, there's a major unforeseen expense, we can always be the point of communication with their servicer to see what can be done. There's forbearance, there's loan modifications. Now, all of these could have impacts to your credit, but they're going to, some more than others. Some servicers will say, okay, you have a 3 or 6 month forbearance where, you don't have to make any payments, but we're going to add it to the back end of the loan to get you through this period.
Okay.
Or if it's something more serious, maybe a loan modification where it does impact your credit, where they remodify the terms of the loan to be more favorable so you have a lower mortgage payment, but then they notify you, the credit bureaus, that they've done this. So it's not necessarily like having tons of lates or defaulting on your mortgage or foreclosure or short sale, but the bureaus will be notified that you had to modify your loan. That's kind of like towards the worst case end of things. Obviously, we'll look at refinancing. Is there opportunity to save money on their mortgage? And the lender should reach out well before then if there's an opportunity for this. And then I think we can loop you guys in. And if, maybe it's the situation where they can't afford the home anymore, maybe it's time to sell before the short sale period, you get into that period. Obviously, that's unfortunate and happens. But there's things that happen that are, out of people's control, and it happens all the time. Yeah. But there's definitely things that can be done in unforeseen circumstances before you have to sell the home. To hopefully get the buyer back on their feet and resume mortgage payments without impacting their credit too much. That's a long-winded answer. Yeah. Sorry.
No, that's fine. So how does a credit score affects rates?
Yeah. So
if you want to buy.
Yeah. Banks, for the most part, all have the same guidelines. There's specialty products that have different guidelines that could fit people that have special circumstances, portfolio loans. But for the most part, there's debt to income ratios that if you have a certain income compared to...
That's going to be a next question.
Yeah, sorry. So if you are approved for a loan based on your income, the next step is your credit score. And banks essentially assign risk based on credit score. The lower your credit score, the more risk it is to a bank. So banks will look at credit scores in 20-point segments. Let's start at 640. 640 to 660 is going to see a set score. 660 to 680 is going to be a slightly better score, and all the way up to about 780. Once you get to 780 and above, you're going to be the best, risk for a bank, and all the rates are going to be at the best pricing bucket. Yeah. But everything below that in 20-point segments is an adjustment to the rate, unfavorable adjustment to the rate. So once you get pre-approved and the lender sees what your credit score is, you're going to have some time before, you're under contract or you decide to buy or maybe not buy to improve that credit score. Banks can do what's referred to as a rapid rescore. So they don't have to wait a full 30 cycle. So if, we see a lot of collections that buyers don't even know are on their credit reports, right? So maybe like a cell phone that they didn't turn back in, and now it's like a $400 collection that's tanking their score. If they pay off that collection and the collection gets removed, the lender can do a rapid rescore where they submit the paid off document, and the credit bureaus can remove it within 3 to 5 business days. So then their credit score is improved before they're under contract or during the contract process, and they can achieve, a lower rate that's going to be very beneficial
in a long term.
Short term, long term, because it could be significant. Yeah. In the low 600s, I would, it's probably high 7s right now, depending on other factors, as opposed to, higher scores are going to be mid 6s, low 6s right now. Obviously, other things considered. So there's a pretty big difference.
Okay. So what was my next question?
Was it about debt to income ratios? Yeah.
Yes.
Yeah. I say this a lot. My wife always makes fun of me because she's like, you always say debt to income ratio to everyone. Essentially, it's how a bank determines what you can get financing for. And I always use an easy example. So let's say a buyer earns $60,000 a year salary. They're going to break it into gross monthly incomes. So they're going to look at it, $60,000 divided by 12 is $5,000 monthly. You're going to have taxes taken out, but they're going to look at the gross number. Banks will say, well, for the most part, unless you're looking at specialty products, we'll allow you to use half of your gross monthly income to go towards a housing payment, a proposed housing payment of something you buy, and any other monthly obligations that you have. So let's say the buyer has a $500 monthly car payment that they have due, and maybe nothing else. So they've paid off their student loans, they pay off their credit cards every month. So that means they have a $5,000 monthly gross income. Half of that is $2,500 minus the $500 car payment. So that means they have $2,000 left over that can go towards a housing payment. And that housing payment has to encompass the principal and interest, the taxes, insurance, and any association dues. So when a buyer comes to us to get pre-approved, we'll tell them, hey, we estimate that you can buy a property of X amount, but that's a general estimate because we're backing into that purchase price. Because as you know, every property is going to have different taxes, different assessments. So maybe a high rise in Edgewater is going to have much higher assessments than a mid-rise, somewhere else. So, the purchase price is going to get adjusted, and that's why it's important for them to communicate with us what they're seeing. But that's kind of the debt to income ratio and how that works, and what they can be pre-approved for. Obviously, if they have other monthly obligations, that's going to eat away at that $2,000 and limit what they can buy.
Of course, but even we had clients, they were just like, okay, we're pre-approved for this amount, but I don't feel comfortable paying. Let's say if I buy this house, I'm not going to be comfortable paying that much.
Yeah, we find that a lot of people, when they get pre-approved, it's much more than they need. And that's why it's important to have those initial consultations, just like you guys have your initial consultations, to determine what they don't want to exceed, to make sure that they're comfortable with the monthly payment. But then we back into that purchase price, right? So maybe you can afford $1 million home, but really to get the monthly payment that you're interested in, maybe we need to stick to that 600 and under number. And then obviously if they don't find anything, and you guys are, have been looking for a while, and maybe we need to increase that, but they need to realize what that means in terms of a monthly payment number. And there's different ways to, play with that. Obviously, increasing the down payment means they're borrowing less, right? But, you look at all these options. Have you done any 2-1 buy downs? Have you heard about that recently? So essentially, if a property is listed for $200,000, the buyer comes in and says, hey, I'll purchase this property, but the seller pays for a 2-1 buy down, meaning the first year, the interest rate is 2% less than the market. So if the interest rate's 7%, the interest rate for their loan in the first year is going to be 5%. And then the second year, it's going to be 6%. And then the third year, it goes back to the normal rate that they locked in at. But, as of a few months ago, people were using this because interest rates were so high, and they were kind of able to get buyers in with the seller financing it to make the first 2 years more manageable, with the expectation that they should be able to refinance. And the one thing I'll always warn is never put yourself in a position where you think you're going to need to refinance, meaning, hey, this payment's too high for me now, but I know that I'll be able to refinance, because that gets people in. There's so many outside factors that come into play, global tensions and wars and it's, things obviously with the election happening here and what the Fed is doing. There's so many outside variables that could move rates against us as well. So never
lean on that.
Lean on the fact that you'll be able to refinance and lower your payments. So always be comfortable with the current market.
Yeah.
What are you seeing on your side in terms of supply? Are you seeing condos sit on the market longer?
Yes. With my clients that I was searching for a condo, just in Des Plaines, it was March. Like literally one day on a market, we go see it, we place an offer right away, because tomorrow it's gone.
Yeah.
So right now it's like a little bit different. It sits on a market for longer, and you have the power of negotiation again. So just today closing, we lowered a condo It was $30,000. We paid
Less than the list.
$30,000
Yeah,
less,
which was unheard of.
and plus we got the credit for like 2,000.
Yeah.
And I got my commission from the seller, the full commission, because we were negotiating
Yeah.
that as well. Yeah, because, nowadays you have, I mean, it was always like negotiable,
Sure.
but now it's like more than ever.
Do you want to go into that?
Yes.
Tell me about it. I mean, have you seen a big change? I'm sure you guys have done classes on it.
Yes. We were talking, like here we are trained for that really well. But my personal opinion is that sellers will still offer the commission.
Yeah.
Because you know how hard it's for the buyers to come up with the down payment and everything. Mm-hmm. And plus, if they need to buy, if they need to give like 2% or 2.5% to a buyer,
Yeah.
like I just feel that they don't even know. Like when you say 2%, they don't even know the number.
Sure.
So they're just like okay with it. But when they actually need to come up with like $10,000, it's gonna be like a lot for them.
Yeah.
But I feel like my sellers now, they're gonna offer like 2%, but it's still negotiable. So if somebody offers like good price for like a house, I think they will accept even 2.5. So.
And what about on the buyer side? You guys are obviously having to sign the agreement now.
Yes, we have to sign agreement even now before showing the property.
Okay, yeah.
Yeah.
And open houses you don't,
No.
but for showings you do have to have it.
Yes, we cannot show up with the client without. I mean, you can, but I think it's a $2,500 fee.
Yeah.
If you
You don't want to do that. Are you getting pushback from buyers at all?
I didn't have the chance. I had one girl in the office saying that.
Yeah.
That because I feel people are scared now to sign something.
Or it's in their face, right? So
Yes.
like they're like, oh, you know.
So I had just one friend of mine. He was like talking to some agent. He knows that I'm an agent.
Yeah.
But he was like talking. There's this guy. He was offering this and that, and he told him about the agreement, and he was like, "If I have to sign something with, I'm gonna sign it with Suzanne."
That's
because
nice.
yeah.
And that's another reason why I think, the part-time agents are fleeing, because if you're a full-time agent, you can communicate what your value add is to the client. You feel comfortable earning that because you've worked your butt off. These part-time agents, the buyer would send them a home that they found on Redfin. They would go see it, draft up a contract, and that would be it. So I think these agents, so maybe that, it's going to be good in the sense that they can't communicate the value to their client, which is obviously putting the client kind of like, well, what are you doing? What am I paying you for?
Exactly.
Because now it's clearly outlined, who and what and how much.
And I even feel that a lot of agents, they cannot explain to their, they even maybe feel scared like to tell them. We even have one file, like let's say for 1 day showing. Like if people, because, people are scared, they don't want to sign something. They're really scared of signing anything.
Yeah.
So like you can tell them like this is just for 1 day, just for this showing. And
because before it was how long, like 3-month commitment or
it
like
does, like I would say with my clients, I was doing like 6 months.
Okay. Yeah. And it's not,
It
they're not bound to it. You know what I mean?
Like they can cancel it over email. They can just cancel you. It's not a big deal. Maybe somebody's doing like cancellation fee. I don't know.
Yeah.
But
I'm sure we'll see that too. Crazy time.
Yeah. I just feel a lot of changes are coming, and maybe people are not prepared enough.
But again, not prepared enough because they're not in the office like you guys. They're doing stuff from home. They're trying to, they renew their license to do 1 or 2 deals. I don't think that helps anyone. I think it puts a bad rep for you guys, us.
I just got the email recently if I want to put my my license on hold.
Oh, because of this?
Yeah, because I guess a lot of agents are just like...
And I'm sure there's companies somehow making money off of this. The tough part is because we're not servicing the loan, I can't speak to what the actual details are to it. But I've heard of clients reaching out and saying, hey, I've lost my job, or, we had a family health emergency. And then they'll move you up the ladder to talk to a supervisor, and they'll say, okay, well, this makes sense. Can you provide some sort of documentation as proof? and then they'll give you deferment. So you're not skipping those payments. You're not making money off of those. They're just moving it to the back part of the 30-year term. So now instead of 360 months, you're going to have 363 months because you're missing a 3-month payment, 6-month payment.
Yeah, but that's helping a lot.
It's helping a lot.
Let's say if you lost your job and you have to pay for your kids' daycare and this and that, and
And it's much better than, going in, mortgage rates are very detrimental. Those will hurt and will actually impact your ability to get a new mortgage. If you have a mortgage late in the past 12 months, it's very frowned upon and can impact your ability to buy another house if you have to. So the fact that you don't have to have any lates and they can kind of move it without any impact to your credit, this is not a loan modification. I think that's very beneficial. Now the step up from that is that loan modification, which is obviously, has a negative impact to your credit. It's going to give you a lower payment, but it's not a long-term solution. Right. It's still something that should be, we saw a lot of that when during the real estate crash, when homes went underwater. People are like, why am I paying this when my home is worth, $200,000 less than what it's worth? So people were like, hey, I need a loan modification. We saw a lot of this with our people, rushing to buy a home, not rushing to buy a home, but buying a home at the worst time.
When was that worst time?
Like pre, 06, 05, 06, 07, and then the crash happened, and then they're paying a mortgage of $400,000 on a home that's worth $250,000, $200,000. So the people who decided not to foreclose, did loan modifications, which lowered their payment to maybe what it would have been on a mortgage of that size. The opposite of that is a foreclosure. If you foreclose on a home, it's a 7-year waiting period to obtain another conventional loan.
7 years.
7 years. It's 4 years for government financing, which is a little bit more, or FHA financing, which is a little bit more lenient on that. But with that comes, some negative loan term, PMI for the life of the loan. In some cases, upfront PMI with FHA financing. So it's not as favorable as conventional financing that you would get if you didn't have that foreclosure on your record.
Now, do any of these affect like promotional either credits or there's always some type of program coming out that you get into and it either helps you out, there's zero money down or anything like that. But if you fell into hardship, and they had to do something like that, is there ever a time you had to have a consultation with them to tell them, hey, by the way, you're in this, it's it's kind of now everything's all over the place, we're gonna have to figure it out once you get back on your feet?
Yeah, the tough part is with loans, mortgage loans, they're set for 30 years, 15 years, 20 years. There's different terms, but because they're such a longer duration and they're a fixed rate loan, it's tough for them to offer any incentives on the loan itself. Now there are benefits, such as, a no cost refinance, no origination charge for certain industries. But it's not like we see a benefit like you do with credit cards or personal loans that are shorter term, not secured by anything, not secured by a home, because these banks do hold these mortgages, they bundle them, and then they use them as security instrument. They use them as investments for 401k loans, for brokerages. So these loans kind of have to be all uniform for them to be able to kind of use them as investment vehicles, which is kind of why they can't, offer certain incentives on it outside of, some of the costs associated with. But now to that point, there are different loan programs. So VA financing, to kind of touch on what you said, VA financing is for veterans and spouses of veterans that allow for 0% financing. So you could purchase a property with 0% down payment, usually much more favorable terms that veterans and their spouses can take advantage of. Now, obviously, you still want to make sure, hey, you're borrowing the full amount of the value of the home. What kind of position does that put us in? The questions we ask is, how long are you going to be in this property? Is this a short-term property? Because obviously, if it's short-term, you have to sell. We want to make sure you're not doing anything at the closing, right? Because you're still going to have costs as a seller. There's government FHA financing that allows for as little as 3.5% down payment for multi-unit properties. And then conventional financing now with first-time home buyers, you could buy a property with as little as 3% down, multi-units with 5% down, and kind of within those conventional financing options, there's programs for first-time home buyers. There's down payment assistance options. There's so many programs available out there, all with pros and cons that can help buyers get into homes who might not have, saved 5, 10, 15, 20% of a down payment.
Do you offer any of those?
Yeah. We work with, around 20 different investors and banks who offer a wide range of programs. Then we can kind of work with to fit what the buyer needs. But again, it's going back to that important conversation of what does this program put us in? Short-term, long-term, are you comfortable with this? Some of these down payment assistance programs act as grants. So you have a recapture period, meaning that you'll get the down payment assistance funds at closing, but you might have a recapture period of 5-6 years where if you sell or refinance that, that amount that was given to you as a grant has to be paid back. So there's different programs, and there's different programs that don't need to be. There's forgivable programs, that we need to kind of find out what buyers, fit for, and even more of a reason.
But you're just basically helping the buyers to get into the first home.
Correct. Yeah. If they come to me and the monthly payment is something that they're comfortable with, but maybe they're struggling to save up a down payment, it's still a conversation to be had of, hey, what happens if there's an emergency after closing? What are the options here? We want to not only give them the loan, we want to make sure long term they're in a position. So I work with United Home Loans, which is a smaller family owned correspondent lender, and our boss always strives for not only making sure that the buyer can obtain a loan, but putting them in a position where they're going to be able to succeed moving forward, and not result in, short sales, foreclosures, defaults. Because again, we're still a smaller correspondent lender. It's bad for the buyer. It's a bad look on us. So we do have some, I guess, moral compass or moral obligation to put people in the right position.
Do you tell to your clients things that I didn't know, like when they start with the mortgage, like let's say it's 30 years. Mm-hmm. So at first you're just paying the interest.
Yeah, not pretty.
It's not pretty at all.
Yeah.
For the first year we paid off like maybe less than 1,000.
I think the rough estimate is 1/3 goes to principal and 2/3 goes to interest, if not a little bit more.
Yeah.
And then as you were probably going to say, it shifts. Right?
Yeah.
Did you guys pay it off more aggressively, or did you?
No.
Yeah.
So that was my next question. Let's say if I have like 10, 20, 30 grand and I just want to put towards the principal,
mm-hmm.
Is there any penalties, or
Yep.
can I do it, or can I just set up a monthly to just pay little by little?
Those are all options. So most conventional loans, if not all of them, have no early payment penalties, meaning you can pay it off the day after closing. You can pay it off as aggressively as you want. The bank is not going to penalize you for paying it off. Now, the options are paying a little bit more every month. So everything over the minimum should go to the principal amount, which will obviously shorten the term of the loan, shorten the amount of interest that's going to be paid over the loan because you're paying more to principal every month.
Okay, so that's just the period is going to be shorter. What about the monthly payment?
The monthly payment
always gonna
is going to stay the same. Now, the other option that you kind of talked about is making a lump sum. If you make a lump sum, so of $30,000 towards your mortgage, you can reach out to your servicer and say, hey, I paid a large sum. Can you recast my mortgage? Recast means update the monthly payment based on the remaining balance, but keeping the same terms.
Oh, wow.
So you're able to do that. Every servicer is a little different, but you're able to do that. Some offer it with a small fee of $150, $200. Some offer it for free a number of times before they'll, start charging you. But, in an interest rate environment like this, if you have a low interest rate and you want to pay down your mortgage and not refinance, that's a way to do it where you can update your payment to be a lower monthly payment based on the lower balance because now you've paid it down. So you have two options. You can pay it down on a monthly basis, which doesn't change your payment, but does shorten the term and shorten the interest that you pay over the life of the loan. Or you can make a large lump sum payment and do a recast, which is updating your monthly payment.
Yeah, so just because I was thinking, like, let's say if I want to buy a house
mm-hmm.
in the next year, 2, 3, and then I want to use my condo as like investment. So I want the tenant to pay for everything,
Yep.
basically. So that's going to be the case, probably.
Or
with
not in your situation, but in situations where people are listing their condo and maybe upsizing and moving to a home, but the condo has not sold yet, they can close on their home and then use the proceeds from the sale of their condo to make a lump sum after closing.
Oh.
So, you can put, a 5% down payment initially and then apply another 15% to get to that 20% mark or however much you want to apply for. That's still, these, for the most part, they're fairly flexible and are willing to work with you. The important thing is there are no early payment penalties, right? So the more you can
So
pay
do you
towards
set
principal.
up that like automatically, like to go with
Yep.
the payment?
So with when you set up your payments with your servicer every month, you have the minimum payment, or you can set up, hey, I want to pay $250 more every month to go towards the principal.
Okay.
If you want to make a large sum payment, I always advise that they call and do it over the phone because it could be a large amount and you want to make sure it's going to the right place. And then at the same time, you can ask for that recast policy.
But you have to ask.
You do have to ask. Otherwise, it'll go towards the principal, but they won't update your payment because it'll still be based off the original loan amount.
Okay. What about, let's say I own condo.
Mm-hmm.
I want to buy a house and I want to take all of the equity and put it into a new house.
Yeah.
How
Or
do I-
retain the condo, keep the condo.
Keep the condo.
So without selling the condo, we're seeing a lot of buyers utilize a home equity line of credit. So they'll open up a home equity line of credit on the condo, which will allow them to draw. Usually, some investors will allow up to 95% of the value to be drawn on the condo. And then you can use the HELOC funds, the home equity line of credit funds, to purchase a home and use those as down payment funds. So that's allowed. So then you're keeping your condo, however, it has a second line of credit or a second mortgage on it.
Okay.
And you're using those funds then to purchase the home. The risk or the negative with that is home equity lines of credit are typically higher than mortgages. So even though they're secured by the home, it's roughly 8-9% right now. So you would want to pay that off aggressively once you purchase the home.
Okay.
So that's one way to keep it without having to sell the home.
Yeah. I mean, because if somebody wants to buy a house, if they're,
Yeah. And if they're buying a home as a primary residence, they can be classified as a first-time home buyer. So they're still eligible to purchase a home with as little as 3% down if they retain the condo, as long as it makes sense, right? So if to underwriting, hey, you're buying a home, your family's bigger, you're going to school, better school districts. Yes. It makes a lot of sense. Life changes, family emergencies. As long as we're able to clearly and concisely explain this to underwriting, they're not working against us, right? They're kind of working with us to ensure that the borrower is able to afford this mortgage long term.
Yeah. Are the investors doing this a lot? Like taking the home equity to buy another property?
Yeah.
Nowadays, no.
Yeah, startup investors are, so people who are buying their first, second, third investment properties. But once you kind of get beyond that, it's obviously all cash because they're leveraging that to buy. And we see them, unless it's flips, investors tend to focus on multi-unit properties because the risk is spread across multiple units, and that's where we really have seen competition kind of with home buyers, right? Because home buyers, want to get themselves in a multi-unit is seen as a great first investment. You live in one unit, you can live there for a year, 2 years, and then move out and rent all, 2, 3, 4 units. And we've seen a lot of buyers, compete with investors. Now, I would say that market has kind of backed off or cooled down because investors are not seeing quite the returns with the higher interest rates. So we have seen buyers kind of come into play, have more of an opportunity there now.
Yeah.
Have you worked with any multi-units? Are you?
No, but some of my friends, they just told me that, the best thing now, if you're starting, I just feel that it's multi-unit.
Yeah.
Because you're just going to live in one,
Yep.
rent. The rent is going to pay for half of your mortgage, if not.
It's referred to as house hacking.
Yes.
It's all the craze. Instead of living in some condo in Wrigleyville or Lincoln, buy a multi-unit.
Yeah.
Live in one of the units, and then you can move out and buy a nicer condo, whatever the goal is. But I think it's a great way, kind of going back to what our family, they moved here without any knowledge, right? So they didn't, we're kind of the first people experiencing home ownership that people who have lived here forever have kind of gotten a head start on. And I think that's such a big part of net worth and financial independence is kind of home ownership.
What about us who just came by ourselves?
We go through the struggling phase. Yeah.
Yes.
But like you said, you've obviously immersed yourself in this industry, learned and found, if your husband didn't have you, would he have been comfortable buying? You know what I mean? So I think we're lucky that we're in this industry and kind of able to learn and feel comfortable with it. And hopefully we can kind of pass that on to people who are not in this industry and kind of ease their minds.
There's also one topic that I wanted to talk to you about. It's what are you guys gonna do to blend
Should be good.
the 2.5%, let's say, commission into the loan? Like, let's say the buyers, they cannot pay us, but all of my buyers so far, they said if the seller is not offering commission, they're going to pay me 2.5%.
Yeah.
So if they're struggling with that, is there any way that you guys are...
Yeah, there's a lot of misinformation on there. Some banks have started taking it as an opportunity to kind of market, whether it be falsely or not, and saying, hey, you can finance that for the buyer's agent, which as of today is still incorrect. You cannot finance the buyer's commission. What they might be trying to get around, or what actually they're saying is, hey, if you put down 10%, you can actually put down 8% or 7.5% and use that 2.5% to buy your agent, and then you put less down and borrow more. Obviously, that's not, it's benefiting them in the sense that the buyer's agent gets paid, but it's lowering their down payment, impacting their monthly payment.
But let's say somebody's struggling to buy their first condo.
Yep.
And they need agent. They have zero money.
So there's outside of the down payment assistance, right? We're going to talk to the buyer and say, hey, how much money do you have saved up? If it's enough to get them to a point where their monthly payment is comfortable, there's things that can be done, to reduce their cash to close, kind of like reducing the down payment, but reducing their cash to close, reducing their closing costs to kind of offset that and hopefully pay for their agent to be paid. Now, whether that's, you taking a rate, and again, that's more unfavorable to the buyer. So it's currently so debated that there's no way a lender can help pay for the buyer's agent fee, unless, and I say this honestly, unless it puts the buyer in a more unfavorable term in the sense of lowering their down payment or slightly increasing their interest rate. Now, there's, what a lender chooses to do, and I don't even, if they should be communicating. I can't speak for other lenders. I would have to explain, what's being done in terms of the down payment being reduced, or they're taking, maybe a 6.5 interest rate is available to them, but you can take a 6.625 rate and have the excess premium pay for the buyer's agent. Like, there's things that can be done, whether that's legal, whether that's moral, is some people might be doing it, some people might not. But we've been given no guidelines as to what we can do to help the buyer. We've just been told that you cannot finance it as of today.
Okay.
So it's even more reason why we have to have consultations with our buyers initially.
Yeah, always. It's so much.
Do you think if the market cools off at all, that sellers will be less willing to pay the buyer's agent portion? Because maybe they're not getting top dollar now, so maybe they're going to be...
Do you know what is the problem? Because, let's say I am the buyer's agent and I call the seller's agent and they say they offer zero commission. Mm-hmm. If my buyer cannot afford to pay for the commission, he's not going to even look at the house. Yeah. So seller is going to be losing so many people, many eyes on their property.
Sure.
So that's why I feel there's always going to be a sellers who would say zero. I don't want to pay you.
Yep.
But
because the market is still such a market that they know they can sell that property. Right? Even though they're getting less eyes. But I think that's the biggest drawback of this whole thing is the fact that buyers might not be able to see all the properties, or be able to get in to see properties. So I think that's one of the drawbacks, right? You see the pros and the cons of all of this, but I think that's one of the biggest drawbacks.
I don't know, but I just love this new thing.
You do?
I do. I was never scared to talk to my buyers. I was like always, this is what I'm gonna do for you. Mm-hmm. If you like it, that's cool. If not,
But you do it initially. You know what I mean? I think sometimes when we're in sales, we tend to kind of bend over backwards, especially starting off, and that's impressive that you're able to do it so early on in your career. Is not everyone's a good fit for you as a client. Sometimes you need to walk away, and maybe they'll mesh better with another agent, another lender, or maybe they'll realize that this is not how it's done. Maybe I do have to do this. So it's I think sometimes as sales professionals, we have to understand that it's okay to fire clients. And
when I started this business, I just had one client who was like struggling. He was like pre-approved for some okay amount, but he was like not feeling comfortable paying for like, let's say he had one amount in mind, like how much he can afford monthly. So we started looking in like places, like kind of cheap places, and then it's been a year, and then he just decided to he doesn't want to buy.
And maybe that's why you're comfortable explaining this, is because of the amount of work that you put in.
I know what I'm gonna do for my clients. So if they say like 2.5, it's too much. I'm gonna explain why it's not. Or even like there's discount agents. They're not gonna do much for you. I know exactly. I'm gonna give everything for you to get that condo or like to sell it. So I know what I'm offering. That's why I'm feeling comfortable saying like. And
I think those agents will survive. Agents like you,
hopefully,
agents, the cut rate agents, the ones that are not able to explain what their value add is, I think are going to be the ones that struggle and ultimately leave the industry. But I think those are the ones already kind of half-assing it anyway, and doing it part-time. You can beep that out.
Do you have anything like, oh, this is how you should prepare if you are thinking about buying, or like you should save some money, or?
Yeah, I think as early as you can, speak to a lender. From identifying what loan programs are available to you, identifying what your credit score is, what's your credit profile like, can I do anything to improve that to put myself in the best position, whether it's now, whether it's in 3, 6, 9, maybe it's next year. And like we talked about, maybe renting is the option for me. But I think as early as possible, talk to a lender, talk to an agent, to not only see, can you afford something now, but are there properties out there that I can see myself living in? Are there, in areas that I could see myself living in? Because you want to know as much as possible, because you could look on Redfin, on Zillow all day long and use their calculators and
to calculate the mortgage payments. But I just feel like people are not going to come talk to you if they're not ready or they feel ready. Agreed. But I think they should go, as you said.
I think that's a common misconception. Pre-approvals do expire after 3 months. And then after that, it's reevaluating how everything looks. But there's a constant line of communication. Hey, did anything change? Did your income change? Are there any derogatory credit events? So it's an easy update at that point. But the more information that you have early on, it could impact your search for better or worse, and kind of guide you in the right direction, whichever direction that might be in. But we're kind of able to help out and say, we can clean things up. We can kind of give you an idea of what price points you should focus on. And then they come talk to you and say, hey, these are the price points that I want to be in. Is there something available? If not, do I tailor my search? Do I change my search? Because the more we can have these conversations up front, the more it's going to eliminate, kind of headaches down the road, whether it's when they go under contract and find out that it might be, too expensive, too much cash to close, and they kind of rushed into something. So I think my advice for first-time home buyers is have these conversations as early on as possible, because it doesn't cost you anything. It's not contingent on you buying, working with the lender
First
that pre-approves.
First question is going to be, do I have to sign something?
Yeah. And you don't. I mean, for us, they don't have to sign anything, and nor do they have to work with us. Obviously, for you guys, I think it's much more of a time commitment and value that you guys are adding initially. So I completely understand that. But that would also kind of make things easier for you guys, right? Because then you're not driving around for 12 months for someone to find out, I can't afford this, or I can't find anything in this, in what I am looking for in terms of a property.
I was even having the guy who I was like, he didn't know the area. I'm like, the location is the most important. Like, you know, it was like different stuff that he did, but he needed to go somewhere to see. And at one point we were like it was like half industrial, or like, so he was like, there's a trucks like fixing something. So he was like, I don't want to go there. So it was like, you need to talk to them to see location, this, that price range. So
and I think, you know, part of that is a learning pain, but you hopefully see them go through that and learn fairly quickly, right? Maybe what we see with a lot of first-time home buyers is they still try to go under list, you know, in this market. And they'll go, you know, this home isn't worth this, we're going to offer this. And there's 18 other offers, you know, waiving appraisals, waiving contingencies, you know, $80,000 over ask. I'm not saying that they need to be putting themselves in a position to be uncomfortable, but I think there is a learning process that you almost have to let them go through to find out, you know, what the market's like, because you're offering your expertise, but ultimately it's the client's decision, right? You know, I
remember my first deal in this company. I just moved to this office, and they were having a training like how to win in a multiple offer situation. And I was literally going through that.
Perfect timing.
Yeah. So basically, I used everything that I learned here, and then we got the
Did
offer.
you?
Yeah, but like, the question that I'm asking my client, how bad do you want this condo? Like 1 to 10. 10, okay, I'm gonna do everything. Even though if it's like 5,000 over, 10,000 over, like they're gonna, in the end, they're gonna be happy, and they're now really happy.
I feel for you guys, because I see the emotional side of when buyers are going through the search and making offers and losing homes. I could just imagine how they communicate that with you. You know, I've seen a lot of buyers make 5-6 offers, not get anything, and say, we're giving up. And then next week they're back and saying, we're ready to get back on the hunt again. So whenever I pre-approve buyers, I tell them it's a fun time, it's exciting, but it's also going to be an emotional drain. We went through the same thing. My wife, you know, she was pregnant. We were looking for a home. We'd rented our condo, living in an Airbnb. We were looking for homes, and, you know, we lost out on 2 homes, and, you know, it was, you know, we'll never find a home like that again. And we found another home. But I think when you're going through that process, it's very emotional. And you kind of have to, you know, kind of let them experience that, but also kind of guide them and say, hey, there'll be others. But also when you kind of, you know, kind of regain, you know, and you're at a level, you know, you're level headed, and, you know, we can kind of explore what we should do next time. Right. Now, whether that's being competitive or maybe looking at a different, you know, area, but you kind of mentioned how to win in multiple offer situations. You know, what we're seeing is what we try to do on our end is, you know, past making the loan terms look as most appealing to the sellers as possible. So higher down payments. You know, we try to communicate with the list agent immediately. So once our offer is made, once you make an offer, I reach out to the list agent and I go through the general credit profile of the buyer. So I assure them, hey, you know, income is strong, you know, base salaried employee. So there's no, you know, varying income, strong assets, credit score is excellent. Sometimes that kind of sets you apart from other buyers who are, you know, also getting financing. But in some cases, if there's cash offers, it's tough to compete with that, as you know. So, you know, we try to do as much as we can. We also see things like writing letters, you know, trying to get, you know, and we see that. Yeah, exactly. Maybe a family that's selling wants to sell to another family, not a developer or an investor. So there's definitely things that you guys can, you know, advise on, that we can advise on to try to stand out.
But they have to listen, you know, there's so many times, like I'm just saying, like, if you do this, we're going to get this, but if they're not willing, like there's nothing that I can do, because in the end, I have to listen to them. Yeah.
And again, it's kind of the middle ground of this. Do they need to go through this learning stage, or maybe they're just, and I've had, you know, maybe it's not the right client for me. You know, if they're not willing to take and again, they can take your expertise and your advice, and kind of, you know, work together on it, or they can just kind of want to run their own ship. Do you think we'll see any more supply once school starts? Do you think we'll go through that normal cycle?
I'm not sure, just because of the election. at
True.
the same time.
Yeah.
So it's.
Or people just haven't taken kind of the time off that they normally
I just
do.
feel people are just on the sideline. They're just waiting to see what's going to happen. Like everybody's scared.
Sellers.
So,
Yeah.
sellers.
I don't think the buyers have slowed down at all. Like usually we'll see a lull in July, August as people go on vacation. I think the buyers who really want to buy or have still,
just because they waited for so long.
And they're trying to use every opportunity of less competition as possible. And I think as rates start to fall, we'll only see that increase, unfortunately, because now it's going to bring back more buyers, right?
This was a great conversation. Thank you for being here. And if people wants to find you, how can they find you?
Yeah, thank you for having me. They can come visit us at our Noble Square location. We do have a ping pong table, always up for challengers, and you can probably find my contact information in the description below.